All right, let's knock out Fibonacci 101, understanding Fibonacci. So that's going to be the focus of this video. So in this lesson, we're going to break down Fibonacci with a very simple explanation so that you can easily start to use it and deploy it with whatever your trading strategy is. Why is Fibonacci so important? Simply put, and reason number one of two, the markets respect these levels. When you see the market trending as it ebbs and flows, all that's taking place is price action is seeking a level of structure, and that level of structure will usually coincide with one of the major or minor Fibonacci levels. The technical term or correct verbiage that you want to use is called confluence or ratio confluence. That's what you're looking for. The Fibonacci levels are usually confluent with market structure, that's support and resistance, meaning usually lining up with or overlapping with support and resistance. And reason number two, your harmonic patterns. That's the big thing. Your harmonic patterns or advanced patterns, they form and complete as these levels are approached and tested. Okay, so your advanced pattern recognition, or APR for short, is dependent on you having a trained enough reticular to identify or approximate these movements. So with that being said, let's just get a little bit more detail, and then we'll do some training on it to make sure that we bring this home so that you can understand it and start using it. So Fibonacci, what is Fibonacci? Okay, so we're talking about the tools that you'll see on any charting platform. Fibonacci retracement and extension tools are popular technical analysis indicators. So it's an indicator used to identify potential support, resistance, and price targets. So that's what you're going to be using it for. And if you need assistance with that, you can pretty much refer to any of my videos when I start talking about targets, and you'll see me use the Fibonacci retracement for targets, as you see here. Okay, so a little bit more. The Fibonacci retracement, the purpose to identify potential support and resistance levels during a retracement. So this is dealing with retracements, okay, or pullbacks, correction. So you usually are going to want to know how much something corrected, because that's going to take us over to the extension side, because what happens on the retracement determines the extension. Okay, so to identify potential support and resistance levels, you want to know what this, there's usually going to be in this case it'll be support. In this case over here, like let's say you're talking about a correction coming down, you're coming down to a level of support. When you're talking about the market correcting up, those are levels of resistance. Okay, so during a retracement or a pullback within a trend, as it's evident and flowing. How it works, it uses Fibonacci ratios, 38.2, 50, or 618. And I'll talk about the majors and minors in a second, to divide the vertical distance between significant high and low points on a chart. These ratios indicate potential areas where price might reverse. So if you're looking up here, when you see this area here, knowing that there's market structure there, that's where it might reverse and go the other way. So this, in this case right here, if you were trading this trend, if you wanted to trade, if you saw the market trending and you got to this point and you saw this pullback, you'd be looking for an entry here. In this case, it'd be a 618 retracement, and you'd be looking for price action to come test up as it's continuing to push upward. Okay, so these ratios indicate potential areas where price action might reverse. So come down here, reverse, and go up. Again, we're trying to simplify this. So we were talking about those numbers in there. There are major levels and there are minor levels, and they operate slightly differently depending on what you can expect once those levels are reached or tested. The majors are the 38.2%, or you'll sometimes hear it referred to as the 382, the 61.8%, also known as the golden ratio. You'll usually hear that referred to as a 618 retracement. And then the minors, 50%. You won't hear about that much, but I use it a lot because it's used primarily for one of my advanced patterns that I teach and trade. The advanced bat pattern requires a 50% retracement to validate its B leg. And then 88.6%, that's very, very deep. We don't really use it in ratio trading, but the 886 is also used as the D completion of the advanced bat pattern. So that should cover what we kind of need to understand. That's why I try to kind of set these up here at the top so we can walk through them and just get used to that. So as you start with the retracements, you can start by plotting them all, the minors and the majors, but you'll find yourself cleaning up as you go through time. And let's say you kind of, because your reticular is going to start to train itself. Your eyes are going to start getting used. You'll get to know a 382 without even measuring. You'll know I got 50%. You'll know that's 61, or you'll know that's beyond 61. That's for 786. Your eyes will start to get used to this stuff, okay? So again, over time, you won't always use all of them. You'll start really only putting on what you really need. But when you start using it, right, when you start, because this is a beginner course, when you start using it, you want to go ahead and start bringing all 5 of those levels on, major and minor, just until you get used to it, okay? And again, on the other side, if you were measuring this correction coming up, over time, you're going to be able to look at that and you'll be able to say, I think that's somewhere between 50 and 61, but let me measure it just to be sure. Like, you probably won't need 382. So I think that helps us cover that. So what you want to do is you just want to start looking. Let me say one more thing. You always want to measure from swing low to swing high if you're measuring a correction that's coming down, or swing high to swing low. That's going to mean the whole move end to end. Okay, and that means include the wick. You're going to go from wick to wick basically when you do this. Don't go at the bottom, the base, the closing of the candle. Go wick to wick, because all of that matters. If you don't do that, a lot of your measurements are going to be off and you will not line up with market structure. Okay, so let's jump over and talk about extensions real quick, and then we'll head over to a whiteboard and do a little bit more. Okay, so on the extension side, okay, the purpose to identify potential price targets beyond the current trend. So when you see the retracement come down, right, automatically you should start thinking extension and wanting to know where is it going to extend to. And also, if the move is already there, what you want to know is how much was that, okay? A lot of that's going to help you determine certain advanced patterns if they're valid, because all of the patterns rely on, and they have these ratio requirements, minimum requirements that must be met in order for the patterns to be valid. So if you saw a move like that, you would just want to know, how much did that go? You just got to be curious enough. You take your extension tool and you would measure this low to this high, and it would tell you that this was 127%. The opposite direction be the same thing. You would want to know how much this is, because there's going to be certain dependencies and requirements, especially when you're doing pattern trading, or there's a couple of other things that we'll talk about, or other things that have been talked about in the academy. But you'd basically be looking at from the swing high here to the swing low here, and that's going to tell you that that was a 127 extension of this, which would this high to this low, that's 127%. So how it works, it uses Fibonacci ratio to project where price action might move after a retracement. Okay, it's complete. It helps traders anticipate. So this is a more of like a projecting tool. This is a tool to kind of project what should happen. It's almost like a cheat code. Really, I call it my sword. Both of them, it's the sword, especially on the extension side. But project where price action might move. Okay, so it doesn't always happen, but this is going to allow you to project and kind of get close. After a retracement is complete, it helps traders anticipate potential areas of support or resistance in the future. A lot of times that extension right there, when it's done, if you look left, because of course you always want to look left, structure leaves clues, there's going to be in this case right here, there would be support there. In this case right here, when this part is done, there's going to be resistance right there. So one more time, there are major and minor levels on the extension side too. The majors are the 127 that you saw me talk about, and the 1618, which is also considered the golden ratio. Okay, so the 618 retracement is the golden ratio on the retracement side. The 1618 is the golden ratio on the extension side. Now there is one minor, the 1414, that comes into play sometimes, and we'll talk about that coming up in just a few moments. But I want to have us just step back and focus on this chart, because this will take us into basically the understanding that I said. Okay, so if you look at the top here, okay, so if your C leg pullback is a 382, that's the first one that we see, the yellow one in gold. If your C leg pullback is a 382, that usually results in a 1618 extension. And okay, and this is how the market works. It makes these equal measure moves. Not all the time, but the majority of the time. Okay. If your C leg pullback is 618, okay, so that's going to be the red one. If your C leg pullback is 618, usually your extension of that leg is going to be the 1414. It's going to usually be somewhere in between the 127 and 1414. And if you have a deeper correction like a 786, okay, 786 retracement, that's the last one, the purple one. If you're going that deep, usually your extension is somewhere around 127. So I wanted to throw that in there. And that also takes us into the A to B is equal to CD pattern. That's why you see this label A here at the bottom and then B for that leg. Basically, what they're saying is when you clone that leg and when you put it on what will be C, that's going to tell you. All right, so they should line up. Okay, so that A to B is equal to CD pattern is always going to line up pretty closely in most cases with the extension of that A to B. They're always pretty much going to come by each other and overlap. So with that part being said, let's just go ahead and do some whiteboarding, and then we'll be able to get out of here, and hopefully you'll have a better understanding of Fibonacci. Always leave your comments in the comment section, any questions, and I'll go ahead and answer them. But we're trying to make sure that once you leave this video, you have a good enough understanding of Fibonacci so you can just break it out and start using it, get used to it. I don't understand how traders come in and trade these markets without using Fibonacci. I do not understand that. And this is the game of structure. Okay, so looking over here, kind of similar to how we started, wanting to know, just being curious enough to know where this ended, and this fell right in between. This is the 127 extension. It's right in between 127 and 1414 of this low to this high, and then vice versa this way. If we wanted to know how much this was, how much this extended over here, it's the extension of this low to, this high to this low, and that was 160. It's 1618, 161%. So let me show you what that would look like if we did it. So you know what, matter of fact, let's do retracements first. If you had a move that came up here and it came down here, you need to be curious enough to want to know how much is that. Okay, again, over time your eyes are going to adjust, your reticular is going to train, and you'll know. But until you do, you'll have to measure, right? So you'll grab your Fibonacci retracement tool. I strongly suggest that you mark it down as a favorite, no matter what platform you're using. It can be TradingView, it can be MetaTrader, it doesn't really matter. But take your Fibonacci retracement tool and start from the swing low. Remember that is going to include the wick, so you don't want to get confused. You don't want to have to ask that. Just keep that one for life, okay? It's always wick to wick, swing low to swing high. So if you click and you measure and you come up and stop at the top, it's going to tell you, right? So this right here, in this case right here, this dropped right in between the 50 and 618. Okay, now the other thing that I was telling you just a second ago, what I like to do, right? I kind of like cheat and take shortcuts, but I mean, I've been doing this for a long time, so it's a little bit different for me. Right off top, I see it, and let's say this was trending, right? Let's say this was actually trending, right? Because I'm going to show you what this is all about. Right, so this is trending, right? So let's say we got to this point here, somewhere in here, right? You want to know where's the next possible point in structure, because as you can see, resistance, support, right? Resistance, break it, resistance, break it, support, right? So if that's the way that this is working, all you would have to do is take this and clone it, right? Because that's going to give you the projection right off top. It's going to look like that, right? Okay. And then after you've done that, right, we're kind of like trying to advance it a little bit. We're trying to make it a little bit easier. After you've cloned it, then you want to go ahead and run your extension. So you'd grab your extension. So see, we're working them both together. We ran our retracement. We measured that. Okay, the good thing about it is we know that a 618 retracement usually equals, if you refer back to the chart, a 1414 extension. Now, this might be a little bit more, but let's just check that out and see. So if I measure from the low here to the high, and this will take some time to get used to with the extension because it takes 3 clicks. So you click at the bottom, you click at the top, and you click at the bottom when you get back, okay? And then you'll see, let me move this guy out our way, that came exactly to the very close to the 1414. Remember from the chart that we had a second ago, let me go back over to it, that when you get a 618 retracement, that's the guy in the red that you usually get. Look at the top right here on the pullback. The 618 pullback equals a 1414 extension. So if we come back to the screen, our 618 pullback, the extension, when we ran the extension, it came to the 1414 to help you see that kind of like in real time. And you'll see this over and over and over again because this is how the market moves. Okay, now let's just do it one more time. Let's say that we had a smaller one because we want to really kind of go off that chart. Let's say that we had a run. Let's say we had a move and the retracement wasn't so much. But you got to remember, your eyes are going to start to adjust, right? Your eyes are going to start to adjust. So you will probably over time, those little slight pullbacks, you'll probably be able to start picking those up and saying that's probably 382. So you'll grab your retracement tool because you want to be sure with it and start from the low and come to the high and then bring on the 382. I didn't have it on. Bring on the 382 and it's going to show you, yes, it was exactly 382. Now, one more time, just to let you see how this works. Okay, when we have, if you look at the top, our C leg pullback, if it's 382, we usually get a 1618 extension. So you're going to cheat, advance yourself. It's okay. You'll see how it works in time. But you off top, because this, remember, we're talking about in a trending market, you're just going to clone that leg, which would have been your A to B leg, because we're actually going into the A to B is equal to CD pattern. Now, I do have another training on this same exact stuff, but I wanted to come and switch it up a little bit and try to clean it up a little bit. So you see this run and a 382 retracement. We clone that leg. We see we end up way up here. And what we're doing is wanting to know how much is that, right? Just being curious enough to want to know how much is that. And then grab your extension tool, start from the low to the high and come back, right? And we'll see he's right up here. He's not there on the, oops, sorry. He's very, very close. He's very, very close. But the reason he's not all the way there is because he did, kind of dip a little bit past the 382. So he's leaving a little bit of meat off the bone. And that's not an approximation, like on the dot type thing anyway. It's kind of like in the range. Okay, so you're seeing how that works. All right, so hopefully that helps you get going with a better understanding of Fibonacci retracements and extensions, because yeah, you absolutely do need them, especially if you're becoming like a price action based trader or a pattern trader, or just in general, because this is how the market works. This is how it moves. So I think that's all we have on here. Like the video if you get a chance to. Oh, I didn't switch over the last part. I wanted you guys to see where we were. And I did all that talking without explaining the 382 on screen. So just backing up for a second, that 382 retracement, here's that 1618 extension. It was very, very close. It's not always going to be approximate. Sometimes you will get them like on the money, and that's the confluence we were talking about. The other thing when we were talking is when you look left, you're always usually going to see some other point and where there was a test in structure right there too. So that's what we mean. Look left, structure leaves clues. When you look left, and that's why this is what I'm showing you right now is the reason why when you hit this point and complete this, which would be the D completion of this, you're going to see a pushback, a fallback, a correction, a retracement. So this is why that happens, okay? So that's what's important, so that you know you're gonna, once you get to resistance, price is gonna, it's gonna get rejected in some cases. Some cases price action does blow right through, but in the cases where the resistance is strong enough, which is usually your major resistance, because you have major and minor resistance, you'll see price action rejected there, and you'll see a correction. There's no telling to what degree or how much. It doesn't mean that it's always going to go back to previous structure, okay? It could be something slight like another 382, but you're going to see that, okay? Then it's up to you to kind of like look into the chart and identify how far that retracement is going to be. It's not always the same, but usually your retracement or your correction is going to conform to some level of market structure, okay? So that being said, I think we can wrap it up. I hope this video is helpful. I hope it will assist you in your trading journey, and I hope that it's something that you can now add to your toolbox, because the goal of this video was to simplify Fibonacci. Okay, you guys take care of yourself, be safe in the market, and I'll see you on the next video.